morning, ladies and gentlemen. This is Butch Shorak, Options University. Monday, September 17th, 2012. Access to this webinar is for educational and for informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Well, looking at the week that was, it was quite a week as far as economic announcements were concerned. Very little on Monday. Tuesday, very little happened, and then it begins. FOMC meeting took place on Wednesday. Huge surprise on announcement on Thursday. As we see that, we ended up with, from the FOMC, QE3, $40 billion a month in mortgage securities that the Fed's going to be buying back. PPI disappointed on Thursday. Who cared? Jobless claims disappointed on Thursday. Nobody cared. Went into Friday. CPI was better than expected. Retail sales was better than expected. Consumer sentiment was better than expected. And we'll see what the end result was on the market on those days as we keep those things in mind. Next, we'll take a look at the next week and see what we have coming. Again, very little on Monday. On Tuesday, very little happening on Tuesday. And then on Wednesday, we got existing home sales. Coming into Thursday, jobless claims, which always is of interest to us. PMI comes up on 9 o'clock on Thursday morning. And the Philly Fed, which used to move the market a great deal, sitting there on Thursday at 10 a.m. Economic leading indicators to tell us how the month of August did come out at 10 o'clock on Thursday. And then Friday, options expiration day, quadruple witching day, a day of much volatility many times in the market. We'll see exactly how this week comes out. This can be a very volatile week as far as trading in the market as we go into options expiration week. Looking at the SPX, we look at the 5 days last week and we see, can you say a breakout? Can you say crash to the top side? Can you say Bernanke, do not fight the Fed? As we see, we consolidated the first few days of the week, and then came the announcement, and boom, we moved. However, we had a bit of a stall on Friday, as there was not as much follow-through as one might expect, and one can say, well, that could be the beginning of a rollover. Are we overextended? You bet we are. Should you short the market? I have no idea. And the reason I have no idea is because there is that general rule, don't fight the Fed. So what are we expecting as we go into next week? In fact, let's take another look at this in a little larger scale. We see that we had a big move a week ago Thursday on some economic announcements out of Europe. It then consolidated as we went through the week until we got the Fed announcement. In anticipation of the Fed announcement, it was going nowhere. Mr. Bernanke did not disappoint. He gave the bulls exactly what they wanted. QE3, more easy money in the form of quantitative easing part 3, and the economic data added more gifts for the bulls as the market headed up as we go into the week. Now, we did have follow-through. We got a higher high, higher low. We are in an upcycle and an uptrending market, but we are a bit extended. We are a bit far away from that 30-day moving average, which is sitting right down there. And it is time to have a bit of a pullback. In fact, that's what healthy markets do. It's hard to say exactly what the effect will be on the institutional buyers as we see us moving higher and higher without much of a pullback. We've been going up since last June. Retail sales for August were moderately higher than expected, and all the economic news for this past week was not all that bad. Only the unemployment numbers on Thursday morning were a little bit off, and it really didn't affect the market as we look at Thursday. Bernanke overpowered everything. Reminds me of the Greenspan days where we saw the market move in big chunks like that all at one time. The Dow did exactly the same thing, finally broke out of its trading range, heading higher, uptrend, upcycle, an uptrending market. Again, bit of a delay on Friday. We'll see whether that how that handles that on Monday morning, and whether we end up with higher highs and higher lows on Monday, or whether we end up with lower highs and lower lows. Look at the first hour of the market to help you determine somewhat the direction of the market. Again, NASDAQ, can you say breakout? It has a breakout. NASDAQ said highs that it hasn't been in double-digit years. So the NASDAQ certainly following through and leading us up. In fact, we'll take a look in a little while as to what kind of a gain we've had in the overall indices this year as time has gone on. The Russell 2000 certainly continued in the same manner. If you had a condor onto the upside, you better know how to defend it, because it got attacked, as we see that the market just kept right on running. And the Russell, look at that. That's quite an angle coming out of that consolidation area. So we're going to have a pullback, but it's hard to say when it is. What are you going to do when you have a pullback? You're going to buy pullbacks. Why? You're going to buy the pullbacks because it makes no sense to fight the Fed. All four indexes showing great strength and big movement on the news of QE3. Let's take a look at what the week that was, see what kind of changes we had. Dow up 2.2%, NASDAQ up 1.5%, S&P up almost 2%, Russell up 2.7%, as we see the market was moving this week. News overpowers everything. Year to date, Dow up 11%, NASDAQ up a whopping 22% to lead the major indices up for the entire year. S&P up 16% and the Russell 2000 up 16%. It's good to know that all the problems in our economy are over. Will they be bad news in the future? Will this be sold off? You know it will, but I certainly don't know when. Our job is to react to the charts and see what happens. Do I expect a pullback shortly? Yes, I do. How much? Not all that much. A lot of money sitting on the sidelines, and with the kind of news that was being injected by the Fed, this is no time to be timid. VIX, actually, look at that. The market went up and the VIX went up. Interesting. A little more fear in the market on Friday as the market went up. That was a bit of a surprise. We don't see that all that often. Still very low at 14.5. Looking at the bonds, no big surprise. Bonds did what they were supposed to do. Finally dipped below that 200-day moving average. Time for the bonds to bounce again if they're going to bounce. That 200-day moving average should provide some kind of support, but remember, this is kind of a contrary indicator to what the overall S&P does. Looking at TLT, our ETF sector indicator for the bonds, we see that we have had a bit of a pullback, and we should look for some kind of move up, but look at that volume. Not timid, so we may have an entire change. We could run all the way through December. Will there be pullbacks during that time? You bet, but do not fight the Fed. Financials, look at that, new highs as the financials moved up. By the way, who will benefit the most from a QE3? Banks getting rid of all their rotten assets. Who's going to pay for that? Guess. XLF, financial ETF, giving us an indication of what happened. By the way, notice the somewhat bit of a delay. Gap up in the XLF, but a little bit of hesitation. We are in a confirmed uptrend, but certainly some stalling taking place in that chart as we get a doji for the day. Oil reached highs that it hadn't reached in the last 6 months, finally made it above the 200-day moving average as oil actually went over $100 a barrel on Friday for a brief period of time. With that, and not on very big volume, we looked at USO to give us an idea of what that sector is doing. And finally, gold reached a new high for the last 6 months also, as we see it hit a new high. But notice the perpetual doji taking place up there. Remember, when we see that kind of a doji, that can be a reversal signal, but it is not until we get confirmation with lower highs and lower lows. GLD, our ETF sector for gold, went higher on Friday, went higher for the week, and has been moving up ever since the middle of August. And finally, let's take a look at the volume. There's the Bernanke volume, huge. And then let's look at the next day volume. which was Friday. While we might have a potential reversal candlestick, that's not until it's confirmed, but huge relative volume as we saw a lot of action taking place. The institutions are interested in this market. So with that, that's the week that was, and we've got stocks to watch for those of you that are gold members. For the rest of you, thank you very much for being here. This is Butch Shorak, Options University, Monday, September 17th, 2012. Thanks again.